Joining us today, we have Omar Al-Yawer. He is the partner and chief capital formation officer at Roya Partners, a Abu Dhabi-based private credit firm providing flexible financing for businesses in the GCC and broader MENA region. Thank you for joining us today, Omar. It's a pleasure having you.
Thank you for having me.
So first I want to start with private credit has become one of the largest asset classes globally. At Roya, what gaps did you see in the market? And, what were you trying to address, challenges you were trying to address?
Thank you for that. Yes, private credit has been growing quite exponentially in the globe, and more specifically in the Middle East, over two phases. Phase one started back in 2009 when my partners and I initially launched the first business, which was under a different name in another firm. But now the private credit 2.0, which is when we started in 2020 as Roya Partners, is really addressing the mid-market gap that exists, particularly in UAE, GCC, and the wider MENA, meaning these are great corporations, mid-market in size, that need growth finance, and simply banks in the region or traditional financing don't address this gap. And so they go on for many years without having the right capital to grow appropriately.
Okay. And for our viewers who are not familiar with private credit, can you explain the differences between institutional bank lending and what you provide?
Sure, happy to. So bank lending typically addresses a couple of needs. One, specifically in the GCC, have historically lent to large government projects, that's one, or large family groups that they've known for a long time that they can lean on assets that they have, hard assets, particularly land, real estate, or other actual physical assets. What we lend to is cash flow. We lend to cash flow generative businesses that have great businesses, but they're asset light typically. So when they're asset light, they typically cannot get the type of financing that's flexible enough that the banks can provide for 4 to 5 years to allow them to grow. So we, unlike banks where they typically have a rigid term sheet that the borrower either meets or doesn't meet, we typically sit with the borrower, understand what their cash flow is, and then build the financing structure that actually fits within their current cash flow without any necessary growth even, just allows them to grow at the current cash flow pace. And if there is an upside participation possibilities, then we can address that as well.
Oh, excellent. So it seems like a more bespoke solution to small and medium businesses trying to enter into the market.
Correct. That's absolutely right.
Excellent. And so another thing I wanted to point out was you decided to set up at ADGM. Why specifically did you choose ADGM as your home, and what were the benefits of joining the ADGM ecosystem?
We were fortunate enough to join ADGM in late 2020. Actually, December 2020 was when we launched, and with the help of one of our anchor investors, helped us launch Roya Partners as the region's first and only partner-owned private credit firm, meaning myself and my two partners are the owners of the business, which is quite common in the West, but quite unusual and first of its kind here in the Middle East. What that allowed us to do in the ADGM to establish in such a jurisdiction as it was growing and now has become so much bigger, it allowed us to reach local investors, regional investors, and international investors while using the ADGM framework for private credit investing. So when investors are looking at us as an investment house, they look at us and they know that we're licensed through ADGM. We follow guidelines of private credit regime that ADGM has created. So they know that we're doing things properly as Western managers have done for so many years.
Right. So we have one last question. I understand there was can you please tell me the Gym Nation story and the great success that was, and what it means to the region in terms of private credit or private?
Sure, happy to. So Gym Nation, initially 2 years ago when we first lent them provided a private credit investment of $25 million, were the leading UAE fitness chain with 50,000 members. We give them $25 million private credit investment to allow them to grow further and buy back their equity shares from JD Sports and allow them to grow into Saudi Arabia. Fast forward 2 years from then, they've now grown to 200,000 members, 50 locations, and reached a we reached a zip code where they need actually more financing. So HPS BlackRock refinanced out the $25 million that we provided and provided a total financing package of $100 million just a few weeks ago, allowing this business to even grow further. So it was a success for us, a success for Gymnation, and a success for a GP like HPS BlackRock to make this first investment in the Middle East through their private credit channel.
That's the amazing story. Well, we would love to have you come back. And thank you for joining us today.
I'd be glad to. Thank you very much.